Hello guys, it's Randall with BitRaged. So I'm going to do a video here on indicators, looking at a couple different things. We have had a number of questions on Fibonacci, on trend lines, how to draw trend lines, how do you decide what are the points and what makes them valid or invalid. So some good questions. We appreciate those. Keep them coming. We're going to try and address questions. If we have to, we'll do a Q&A, but right now I'm trying to address them in actual specific videos. So we're going to talk about Fibonacci tonight and trend lines and support and resistance, obviously, because that goes along with both and is so crucial. Before we do that, we had a question: what tools am I using? Well, right now I'm using TradingView, so tradingview.com. The main reason I'm using TradingView is I was using Coinigy, but a number of people said that it was bothering their eyes to see a dark color scheme for 20-30 minutes. So I switched to TradingView just because it's a lighter color scheme. I do all my trading with Coinigy because I'm able to actually trade right on the chart with most of my exchanges I work with, so I can actually just put in my buy and sell orders. So I watch the market, I'm looking, and on a fast-paced market, I may need to make a trade on the minute to get in a good position, and I can just literally hover my cursor, click, place the trade, and it's done. I don't have to go to the exchange or anything. So I really like that. It's my go-to tool is Coinigy. So either one will work if you're doing a lot of trading or you want to get Coinigy. If you don't care about trading, you just want to know what the market's doing and kind of look at charts, TradingView is fine. So let's look at Fibonacci retracement. So you'd click this toolbar here, find Fibonacci retracement, not the other fibs, just this one. And how Fibonacci works in a bearish channel like this, a downtrend, is you find a swing high, which would be this point, and a swing low, which would be this point. That gives you the big picture, which is what we want. So if you want to do it perfectly, you would hover over the candle. You would see the high is 19,891, and we're pretty close there. You can be within a couple dollars. It's okay. You're not going to get right on the dollar, but if you're hundreds of dollars off, it's going to throw you off. So, and this was right around 5,800. Let's see if we can get that closer there. That works. So it's pretty close. It doesn't have to be perfect, like I said. Within a couple dollars is fine. So then what we do is we draw this and we look, did the market respect these areas? So the market definitely is respecting this point. We were just here a couple days ago, and the market is respecting. We're literally bouncing off. Now what about this wick? What about this area? Doesn't that count? In Fibonacci, no. And basically in any resistance and support, no, it doesn't. A wick indicates one thing. It indicates price action pushed either up or down, but it was rejected. That's generally not considered a good thing. So what you're looking for is the candle to close above your trend, above your resistance point, and you're looking for the next candle to confirm it. So if you're looking for bullish sentiment, you're looking for a bullish candle to confirm that confirmation that that is definitely breaking through. But we didn't have that. We were rejected, and we are falling off since then. And it very much appears to be a bull trap as that is opening up right now. That appears to be exactly what is going on by all indications. So the market respected there. We drive right through this resistance point on here because we have so much craziness going on here. That is totally valid. The market is pretty much respecting this line. It does drop a little below it. Wicks drop a little below it, but it bounces off. It respects it here. And again, we have a false breakout, which was a bull trap. This is 100% bull trap. All right, you had people screaming, we are going back up to 20,000, and we didn't. And anybody who said at this point that we weren't was spreading FUD and fear. So when you see clowns commenting on videos, on charts, and saying you're spreading fear and FUD. They're just scared, and that's the only way for them to cope, because they don't have the ability to appreciate facts and truth. So they have to say that. So that was a false breakout. It was a horrible bull trap that ended at 6,000. That's where this trap ended. We have a bull trap which appears to be exactly what's going on here. Maybe not quite as clear as that one, but definitely appears to be exactly the same thing. If the same pattern follows, we should be expecting somewhere around 6,000 to be the highest point. Now, it could see huge support come in and stop that, and we could definitely bounce off it. That is definitely possible, but it's about a 5 to 10% chance. Probably lower than that. I'm giving it a very liberal percentage there. That's pretty much what we're looking at. Most likely, we are going to come back to the 6,000 range, possibly drop into 5,000, back into 5,000. That is possible. If we come back up and we confirm this as a bull trap, like literally it just replays this, we will drop to 6,000 and probably to 4,000, because a confirmed bull trap is worse than having it happen, because now you're basically pushing fear into the minds of sellers that the market may not be able to make it back up here for a while, and so now people are clamoring to get out, and it just pushes the price down. All right, so this is a valid Fibonacci retracement. This is what a trader would use. Very accurate. It looks at the whole picture. Well, I'm going to leave that for a moment. Let's do a invalid one. Okay, so that should be fun. Let's just see here. So I seen this on TradingView, so I'm going to try and replicate it because I don't remember exactly, but I think, let me see. I think that was it. All right, so yeah, 38.2 line. I think this is what they're calling. So this is an invalid Fibonacci for several reasons. First of all, it's a small area. It doesn't give you the big picture that you want to look at. Secondly, this is not a swing high. It's a false high, which immediately you have an engulfing bearish candle that wipes it completely out on the next day. So it's not valid. So it's not a swing high. It's not valid. What you could do is you could draw it to this point. That would be considered a swing high. It's not the high, but that would work. And so this would be considered a valid Fibonacci. So then what you do is you'd look at the levels and see if the market is respecting them. And it's not really. It's not really aligning with support. So even though as a trader, this might be considered okay, it might be considered all right to do that, we're seeing that the market is saying that's not valid. So we get rid of it. So that's how I treat Fibonacci. Is I want to see if the market has been respecting it in the past, and if it hasn't, then it's either an incorrect Fibonacci retracement or the market is just not following it. And if it's not following it in the past, then we shouldn't expect it to necessarily do so in the future. So the market is following this very closely, like very, very closely. I mean, it's a very accurate retracement pattern. So we should see price action happening, movement happening, momentum happening around these areas. Now, it didn't exactly happen like that here, but we had such a great push down, and then eventually did drop off again. So that's kind of what, we're looking at. So I'm not going to explain any more about Fibonacci. We're going to do a video on it. Just one last point on Fibonacci retracement. So you have, let's look at the 38.2% line right here is the one we were trying to break through here the past couple of days. that's considered a very important point by traders, is a resistance point for us because we are below it. 23.6 is considered a support point because we're above it. So again, it's support and resistance. That's all Fibonacci retracement is. Now it's important to understand that the line we bounced off, 38.2, is stronger than the line we are looking to test for the bears, which is 23.6. So we have more bearish momentum than bullish. We bounced off a bullish resistance line, and we're headed to a weaker bullish support, which indicates that although it is definitely a fairly good support, that it's not going to be that much of an issue for bulls to go through it. It might bounce off. It might have a false breakthrough and come back up and then break through, but I do not anticipate it being an issue breaking through. We should be breaking through and hitting 8,800 within the next couple days. So that's kind of what we're looking at right now. But again, for Fibonacci, you want to draw it correctly from wick to wick or body to body of the candle. So body, top of the body, bottom of the body is valid, or wick to wick is valid. And you can draw both of them and look at which one the market is respecting. And you would go with that one because that would be the most accurate. So that is how you would draw a Fibonacci retracement on the trend that we are in right now. That would be an accurate way to do it. So if you see people doing things like this, that's not, you can't get anything valid out of that. First of all, it's too small of a snapshot. Secondly, it's an invalid Fibonacci. It's just totally invalid. So it's on multiple levels. So if you see something like that in TradingView, it's totally invalid. I wouldn't give it any value. All right, let's talk about trend lines. We had some questions about trend lines, good points. People made some good points, some good questions. So for a trend line, you have to have at least 2 points. So point number 1, point number 2. Once you have 2 points, it's considered a trend line. But for it to be confirmed as a legit market trend line, a trend line that the market is respecting, you have to have a third. And we just confirmed that a couple days ago. And then we had confirmation here on the 21st that it is definitely a trend line the market is respecting. So if you see people drawing other trend lines in other ways, they are probably invalid because there's one trend line here that the market is respecting, and this is the one the market is respecting. So let me address here a question I'm sure some of you are going to ask. If for Fibonacci you have to go wick to wick or body to body, why is my trend line at a wick, but on this it's bodies? It's a very good question. Generally speaking, for trend lines, traders, there's no rule against starting from a wick and going to body or vice versa. And let me explain why this is the case, because this might help you understand it better. So we said that you need 2 points. So if I was to start here, and let me change the color here so you can actually see it. So if I was to start here, which it's not going to be right on, but, and go to here, that is 2 points. So that is a trend line. Now it's not confirmed yet, or at least we wouldn't know it was confirmed yet. We do now because we're seeing the chart, but you wouldn't know that that was a confirmed trend line that the market is respecting, but we know it is validated as a potential trend line, and then that falls exactly in line. So that works. The other reason why we can do this is because trend lines are not this thin line that this appears to be. Trend lines are actually either support or resistance areas. So you have this whole area, and it may not be, I'm not saying it has to be that big, but it just for illustration, you get the picture, right? Is a resistance point. So depending on how big it actually is, but it's a area. It's not just a thin line. And I drew that above it. Should have been, but it doesn't matter. The point is that it's a area of support or an area of resistance, this being a resistance area. And so having a small wick like that is not a big deal. It's not a big deal at all. It's still considered valid because the trend line can clip the tips of the top. It can cut through a little bit of a wick as long as it's maintaining a 3-point trend that is flows. This flows really well. Let me explain why it flows. So we have a drop, it comes up, bounces clean off, bounces clean off. So every time it comes to the trend line, it bounces off. If it was to do something like that, then obviously our trend line is invalidated. However, you might have a false breakout. That happens. You can have a false breakout, and usually if that happens, you might close above, very shortly above, and then the next candle would invalidate it by being a very bearish candle closing below. So that's generally what happened. If that does happen, what we've seen in the market is that oftentimes very soon after that, you can see another attempt, and that attempt will be a clean breakthrough. So if you do get a candle, a time when a bullish candle actually does close above, but it's a false breakout. After a false breakout, often at some point you're going to see a real breakout. That's how the market tends to work. But you just have to watch for the signs that is happening and not get trapped by a double false breakout or, a bull trap. All right, so I told you guys that we're probably most likely in a bull trap. I mean, that's literally what everything is pointing to. And that would be this here, which is a false breakout. Now, we didn't actually close above, but most people considered it to be. I mean, everyone was calling it that. If there was 1,000 charts on TradingView saying that we had broken through. And that's what creates a bull trap, is when bulls think they're in the clear, but they're not. And the bears swoop in and push the price down, which is exactly what's been happening. We had people tell us it's never going below 10,000, and here we are with a low of 95. So you have to read charts and not be emotional. So when did this happen last? Well, let me show you on Fibonacci, because that's actually going to show you a little better. It's going to show you confirmation. So if we have Fibonacci and we have our trend line, we have how many points to make a trade offer? And we have 2, right? So we'd have 2 points. So looking at our Fibonacci retracement line here, we had a false breakout. Now on our trend line, it's a little farther out and it doesn't show a false breakout. But again, remember we said that a trend line is an area, not just a thin line. So it would cover more than just a thin line. So keep that in mind. But on the Fibonacci, we have a false breakout, and immediately it crashes, and we crashed all the way to 58 before we actually had any kind of pushback upwards, right? So that's what happened from a bull trap, from 17,000 to 5,800. Now, I understand that we came back up here, but you can't consider this a bull run. You can't consider that a bull trend. So this is a definite, this whole thing is from a bull trap. Now, so we have, that was a definite confirmed bull trap. Now, at the 382 line, we closed below it, but we had a wick that pushed into it. And a lot of people were calling that a breakout, that the bulls were in full steam. Look at the similarities. You have a nice bullish candle, a tiny bullish candle that tries to break through, and the next 2 candles so far, very bearish. Same exact pattern. Same exact pattern. So we can expect this scenario to play out similarly, potentially. And if it plays out completely, which we didn't get as much of, we didn't get as big of a false breakout here, as we did up there. So keep that in mind. However, if we push this back up to retest and we do get a fully confirmed false breakout, then our bull trap just got that much bigger, and we definitely would probably be testing 4,000 to 5,000 at that point. So where we are right now, we are definitely looking to retest 6,000 range. 7,000 to 6,000 range is our target. That could change if we see buyer volume come in to push it back, specifically at the 9,200 level. So between 9,500 and 9,200, if we saw huge buyer volume come in to push us back up, then that could change. We're not anticipating that. We're anticipating a break down at this line and to push back down to test these lows, because the market tends to repeat itself. All right, so back to our trend lines. So we have 3 points of contact. It flows beautifully. You have 3 levels. No, not 3 levels. 3 swing highs, right? So swings, and so it's perfect. That definitely fits. What you'll see a lot of people doing is stuff like, let's see here. I'm not even sure if I can replicate it because it doesn't really follow rules. So you kind of just wing it. But I'm trying to remember some of the ones I've seen, because I've seen some crazy ones. And I think that's, I think that's one. I saw another one. If you have to cut through on a trend line, then it's not valid. So a trend line, it should follow. Now, at some point, we are expecting to break through this trend line. How it happens, it's not going to be quite like that, most likely. But at some point, we're looking to break through that trend line. So when we do that, it doesn't invalidate the trend line from the past. It was valid in the past. If we get a breakout, we break clean through, and we start, we set new all-time highs, then this trend line is not, you're not going to come back in 2019 and be like, okay, well, this means something, right? But as far as where we are now in the market we are in now, we're still in this trend, so it still fits. You should keep your charts simple, especially if you really don't know how all these things work. You would want to keep them simple. So this is a simple trend line, easy to understand, easy to look at, easy to look for a breakout. Some people, and I've done it before, you can draw a trend line on the backside as well. It just kind of gives you this box, or people will do a falling wedge or things like that. You can do that. We're not going to get into it today. So I recorded the first part of this video yesterday, but I didn't have time to actually finish it and upload it. So I'm going to close this off. Basically where it is at. There's more stuff I want to cover, but if you guys have a question, you still need answers on trend lines and Fibonacci retracement, feel free to drop those questions in the comments, and we will try to address them in a future video. But this should give you a good understanding of how to draw a trend line, how to draw the Fibonacci retracement, and what makes them invalid and valid. So maybe when you're reading TradingView or wherever you go, you can kind of spot people who really don't know what they're doing, and it can save you a lot of pain. So just make sure that you're drawing wick to wick with Fibonacci or body to body. Either one's valid, but it has to be equal on each side. And then you can draw both and figure out which is the market is responding to. And that would be the most valid, the most accurate to follow. So that's about it. Thanks so much for watching. Please make sure you hit that subscribe button if you're not already. Hit the bell to make sure you're notified for upcoming videos. Please make sure you hit the like button to let us know that you do appreciate our videos. That means a lot to us. And again, definitely comment below and let us know how the video benefited you. If you have any questions or comments regarding the video, we love to hear those. Thanks so much, guys, and take care.